Well, good morning, ladies and gentlemen. Robert Roy here, bright and early, 7 a.m. Oh, dark outside. Hope you're all having a fantastic start to your day. Let's go ahead and make sure you all can hear me. If you please go ahead and type in the number 1 in the chat box. Let me know that you can, so I'm not talking to myself for the next hour. I would appreciate it. Hey, Weezy, how you doing? Good morning. All right. I want to go in and look at a couple of different candidates today, but welcome to Options Explained. We're going to go through some charting, of course. There's no other way of looking at the market without charting, in my opinion. Whether you're an investor or a day trader, it makes no difference. You need to learn how and be able to chart. So we'll spend a little bit of time on that, of course, on each and every one of the candidates we go through. We'll start off with the S&P 500, which for me is where I start my day all the time. I want to see where the S&P is at, what's happening there, and give me some insight as to where the market goes for that particular day and or period that I'm trading for. So let's start off by zooming in a little bit on the S&P 500. I will break this down first for us with, let me just get a drawing tool here. With this rectangle that I drew the other day, I actually had put a YouTube video out, or it was actually it was on Instagram. We put a video out on Instagram. Let's see, there we go. All right, perfect. Let me grab that drawing tool. And in the video, I talked about the breakout of that rectangle, right? And when I say that rectangle, what I'm referring to is right in here, this rectangle that we drew. That video that I posted on Instagram was after the close of this day. So it's pre-market on this day, the first breakout. And I talked about you can be a breakout trader where it just gets above the rectangle and you take the entry. Now, granted, this is S&P 500, right? This is the SPX. So we're not referencing here per se trading the S&P 500, but you can take this and trade it to the SPY. And then, of course, use the S&P 500 for overall market direction of the up or down based on what the S&P does. So we got the breakout, we got a retest of that top horizontal line, and we bounced. And that was the potential entry, right, for a day trade. Now we're looking at, we closed up 2 days ago. Yesterday we closed right near that support level. And now the question really comes down to, are we going to bounce again from here? We're down a little bit in pre-market right now. We'll see where that all goes. But that's what you're looking at on this chart with that rectangle. When I originally start out on every chart that I trade, I am known as a harmonic trader, right? I trade using human emotions, and Fibonacci is the way into that, right? There is my V bottom, my start of my fib. Here's the end or the finish of that fib, right? And then all the rest of the patterns following this move down here, which gave us an upside down H pattern. Right. And now we're at and near those all-time highs. We're in that sideways move. Right. So from that sideways pattern in the S&P, what happens? Quick breakout. And what was going on there, guys, is if you look at the way I describe it is the positions of a chair, right? Of your chair. Well, let's move that a little closer there. Sorry about that. The positions of your chair. So what does that mean? Right. The first position of the chair is you're kind of lean back. And if I move this back a little bit, let's get rid of that orange bar. So if I move this back a little bit and we look at the day that's on the far right side of the screen, that black bodied candle, this is the first position of the chair. There's really nothing for me to do. We're in a rectangle. We're in a sideways move. Nothing's happening. If anything, I'm day trading, but I am not doing anything to really put large positions on, and certainly not positions that are of any kind of swing type trade. The next day we moved up to resistance. I go from position 1 in the chair to position number 2, which is sitting up straight, right? I'm straight up. I'm closer to the keyboard now, but I'm not ready to place any kind of trade. Potentially, we closed here now, right? Potentially, if we fail tomorrow off of this level, there is an opportunity for an intraday trade down with that breakout in that rectangle, or we look for the breakout above, to the upside, and we look for the entry there, right? So the next day, now I'm sitting straight up. The next day, we get the breakout, and that's where I go from sitting straight up to now I'm on the edge of my chair. I'm leaned forward, hands are on the keyboard. I'm ready to place a trade. So the easier way for me to remember it in my simple head is that 3 steps of or positions of the chair just help me to realize, if I'm in position number 1 back here, right, I can't reach the keyboard. It's too far away. I can't trade that way, right? Which is good. For me, it's good. Anyway, for some of you, you're probably much better than I am at deciphering and figuring out exactly what the market does and keeping all of your human emotion in check. I'm sure many of you are experts at that. Ha, 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 right? When it comes to your money, it doesn't always work that way. And now I spoke to someone yesterday, a friend of mine yesterday, who's a really good trader. And he's got a new strategy that he's trading. And I asked him how he was doing with it. He goes, Rob, every time I trade it on paper, I do awesome. As soon as I go to put real money in it, I get crushed. I said, I understand. It's an emotional game. And he's been trading for a bit now. And he said, what do you think? I said, well, realistically, why do your other strategies you not have that problem with, and this one you do? He said, that's kind of what I'm trying to figure out. I said, I can give you the answer. You're comfortable with the other strategies. You've traded it 1,000 times. This one is fairly new, and you just don't fully trust the system. And when you can take your hands off and let things go, it becomes a much different place for you, for investors, for traders. It becomes a much different place when you trust that system, right? I have an advanced training I'm doing this evening for our mastermind group. And we teach every week live to our mastermind group. And in that training tonight, the topic is get out of your own headspace, right? And it's how you do things to mess your own trade up, all the time. It's almost like you're having an internal conversation with yourself where you're sitting here saying, you shouldn't do this trade. I know you're right. So why are you doing it? I don't know. So stop. I can't. Right? And you're all messed up in your own head over that trade. There are things that you can do to help you. Doesn't mean that we're going to get rid of all of it. Certainly if you've not put in the time, put in the work, the screen time, right, of placing some of those trades. So all of that to say S&P 500, now we are pre-market, so there's nothing happening here on this chart. But if I take us over to TradeStation and we look at the ES, which is the S&P 500, the E-minis for the S&P 500, this vertical line was yesterday's close at 5 p.m. and open at 6 p.m. Right, so you can see we had a little bit of a pullback at the end of the day yesterday. That pullback continued straight down. We had a nice move up, and then we got crushed. The market took a big hit last night at 10 o'clock. We started our climb back up from there. It was a long fight to get back up to about the highs of the earlier session. And this all took place from 2 to 4 is kind of the European Open in there-ish, right? You get pre-market news, the open play, and then we've backed off and we've been into a sideways pattern now. And actually, when I lay out my strategy setups this morning, which I'll be doing right after this training today, I've got videos that I'll be doing for my students as well at WealthbuildersHQ.com. So this rectangle puts us right back at the top of the box, right? Is there an opportunity to take trades here? Potentially, you could trade in the rectangle. We look for the breakout, but you can see how that breakout without confirmation has failed over and over again. We got to close above, and we immediately moved down on the next candle. So we never really got a true breakout and retest. For me, on ES or on any position, I would have liked to have seen that breakout, come back and retest and bounce. Now, that's up to you if you want to do that on an intraday candle or intra candle, meaning that it breaks out and pulls back a little bit and starts to bounce in the same 5-minute or 3-minute or 1-minute candle, whatever you're using, and you take that as a signal. For me, I'd like it to break out and close, come back down and close near that level would be ideal. I'm less concerned there for me, depending on the position and how much money we're putting at risk. I would look for either a pullback and a close there or a pullback with a quick bounce and take the trade from there. But by doing so, there's a couple things that happen there. When you use my methodology, you will take less trades. There's no question. If you're a breakout trader, you absolutely take more trades than I do. No question about it. If you are a pullback trader, as I am, I get less trades, but I also have a better chance of being right. Because all of these head fakes that happened over here I didn't get caught with any of them, right? Could I have gotten caught here on this one? Maybe, but it's one time, not 5 or 6 that happened this morning on the same position, right? So let's see. Yeah. So Alt says the revenge trade still gets me now and then. I know. Yes, the man with the plan. Hey, Money Mitch, how you doing? My favorite bullish options trade, Money Mitch, it's like, who's your favorite kid? It's a really tough way of asking the question. It comes down to market conditions, right? Our VIX is so low right now that selling strategies, as much as I love them, are a little bit tougher to get really good premiums, right? So I'm not as big of a fan of covered calls and diagonals, particularly the diagonals. Covered calls I still seem to do okay with, and my naked puts. But my diagonals right now I don't do as well with, but when we have a VIX up above that 25 level, we crush it on diagonals. We do it all day long, right? If you look at the Russell 2000 right now, right? Let's see. If you look at the rut, you can see we've been in this major rut, right? This major sideways market. That's awesome. It's a great market for iron condors. I'm in them all the time. I've got 2 different sets of iron condors going right now in my account, right? And I'm getting ready to add to another one because one of them is about to expire. They're just about worthless at this point, right? So, in this market condition that we had with some of this chop, directional swing trades becomes harder. So Money Mitch, you see where I'm going with this? All of these are trades I love. Every one of them, trades that I love. If you look at, from me, the types of trades I do, very heavily I day trade companies like Amazon, Booking, Chipotle. Who's the other big one? Oh, Google. Duh. So Amazon, Google, Booking, and Chipotle. Chipotle I've traded for a long time, but only recently getting this massive increase in price, right? I love those guys, and I day trade them all the time, right? I swing trade them not as often. I swing trade lower price stocks. And when I say lower price, for me, Home Depot is kind of the lower end of the stocks that I tend to trade. And I'll be more than happy to share with you guys. Let's see if I can see it here. And we just made an adjustment to this list last week. I had a live training I did with one of my groups. Let's see, PO, there we go. This is my list of stocks, guys. I can't make it any bigger. There's really nothing I can do for it. So take a picture with your phone and zoom in on your picture on your phone or something. But, if you look at these stocks, and I don't sort per se by price, I sort by the move. So Home Depot moves about $10 every 2 days, right? In there, right? This is kind of the lower end of where I tend to trade. I do have stock price in here. And there are ones that are lower price, but they move more, which is more important to me. I look at the movement. Alibaba is under $200, but it moves $12.80 every 2 days. And that's called a Fibit. And I'll go into that explanation one time over here. But so that's the list of what I trade. So day trades very heavily on the big price stocks. If we go by the highest price ones, here, let me clear this out. The Amazons, Googles, Bookings, Amazon, Google, Booking, Chipotle, those are more of my day trades. I do some swing trades on them, but I really need a perfect setup, the perfect storm to take a day swing trade on that position. When it comes to the other positions in here, I will day trade and or swing trade those as well, right? We recently removed Apple and put Square on our list because in this entire year on Apple, we lost $786. The other 19 stocks all made us money. And of course, in our non-funded accounts, right? We don't talk about funded trades, right? Everything you do should be practiced when you first start. So we pulled them off. They just, after their split, they haven't made the moves that they should. We did 6 or 7 trades on Apple and just couldn't seem to get the momentum that we needed to get some profit going in there. All right. So Money Mitch, not to avoid your question at all, right? But those 2 strategies are some of my favorites. Credit spreads, I do a bit of. I've got one series that I do credit spreads on. The whole purpose is just to pay for the car, right? The goal is instead of you buying a car, put the amount of money in the car. If you had the cash, put the down payment down, whatever you have to, put the rest into an account and trade that account to pay the car, right? Or whatever you're looking to pay off, student debt, whatever it is. Instead of giving the cash away, killing the goose that laid the golden egg, right? Let's use that goose to lay more eggs. And then iron condors, as long as the market's not a screaming roar up or down, I'm trading iron condors. So I hope that helps, Money Mitch. I sell puts and buy calls, Money Mitch. If it's in my IRA account, I will sell puts first, if at all possible. All right. Can I show you some patterns and examples of trades in Google? That's Misty B. So if you are willing to wait a couple of seconds while I open something up, sure. Let me find this spreadsheet so I can get the dates. All right. So let's go to Google. And let's see if we can. I've got to find something that would be recent or else it just won't work for me. So let's see. Let me put this here and open it up. Good. So I've got a trade we did on August 5th. So where are we today? The 10th. All right. So that works out fine, right? And happily enough, it was a profitable one. So we're good. But it's the last one we did. So here on Google on August 5th, and I'm just going to take some notes so I don't have to keep flipping back to this page. 8.5 at 27.02, we took the entry on Google, right? So let's see. So August 5th would be right here. All right. So on August 5th. So what are we looking for? So this is the 5th right there. So that's our entry day right here. Okay. On that particular day, that's the, now this was a day trade. All of my trades on these larger price stocks for the most part are day trades. We took 4 contracts. U is up, right? I tried B for bullish and B for bearish. It didn't work, right? Couldn't figure them out. So U is up 4x. We did 4 contracts. Number of contracts was 4. Okay. 4 contracts always highlighted in yellow. All right. So we took 4 contracts on that trade on that day. So what are we looking at? We're looking at a 2,700 horizontal fib line. I mean, horizontal line there. Just the 100-point levels are extremely important in trading, right? Until you get, well, there's rules we have for when we don't use them. I don't use them on Amazon. I don't use them on Booking. And I don't use them on the S&P 500. Actually, I do use them on SP. So Amazon and Booking are the only 2 companies I don't use them on. Everybody else I use 100-point levels on. And then there's a fib line of 26.9612. So 26.9612. I don't have anything drawn in there, but that's a blue zone, a level of support, importance, whatever you want to call it. Right? So let's go back to August 5th on an intraday standpoint, 5-minute chart, not with the pre and post. Let's go get this right here. Let's go to Google. I don't trade Goog, it's Google for me. All right, let's scale back to August. So scroll back to August 5th. That's 3rd, 4th. So this is 5th right here. Okay. All right. So I had 2,700. Let's see, that line got moved a little bit. Let's change this back over to 2,700 exactly. And then let's insert another line and let's mark that as 26.9612. Oh, Rob, could you really just do 26.96? 26.9612. You can do anything you want, right? For me, the importance in there is I have exact. Since I'm a harmonic trader utilizing Fibonacci's, I want exact numbers. I don't use a 20 moving average and a 10 moving average. If you use them and you like them, that's fine. But when I tested 4.5 million plus days of back testing on moving averages and found 8 and 21 for my trading style to be the best moving averages to use, I use them. And ironically enough, they're both Fibonacci numbers. So if we look at this zone that I just drew in here, or those lines I just drew, rather, I'm going to create a zone now. There's our zone right there. So we pulled down and got below the 2,700 level. We took and closed below that, but above the 26.96.12. And then we broke out from there. And on that breakout was the entry into the trade as we started to come back above that level. Okay. It's an aggressive trade. We took 4 contracts. We don't take 10. We take 4 because of price. The cost can be astronomical on positions. On the 5th, it was a Thursday. So our pricing is very much near the lowest it can possibly be for the week because there's only 2 days left in the week. So your cost is fairly inexpensive in comparison, right? And that's a relative term, what it means inexpensive. For someone that says, yeah, anything over $5 is expensive, then Google is always going to be expensive. But it's a $2,000+ stock, right? So right in there, we took the entry on that bounce, right? And then my stop was set down below here. So if we did come back, my stop is down here. Now, if you look at that and say, wow, Rob, that's like $6 or $8 of risk. Yes. But again, it's a $2,000+ stock. On that day, it was we're about $2,700. I'm just looking at the current price, $2,725 on the right of the screen. But it was about $2,700 on this day. So you're talking about risking $6 or $8, $10 on a $2,700 stock. It's not unheard of at all. All right. So if we look at the results, that trade we got out at $27.25. Why? Well, my goal intraday would have been about $5 below that level. So let's call it $27.61 would have been my target. We didn't get there that day. So we're out by the end of the day. We're out on the close of the day, right? 3:55 Eastern time, we exit out of that trade. All right. Misty, did that help? Did that kind of answer it for you? I mean, it's not like we haven't done other Google trades. We certainly have, right? But that one will be the, actually, let's see something for a second. On Google, we're up $63,000 this year. We took 10 trades. 8 of them were winners. 2 of them were losers, right? 9 of them were 4-contract trades. 1 of them was a 10-contract trade. Right, that was before we instituted that rule in early January to no longer trade 10 contracts. Same thing if you look at Amazon, we had 1 10-contract trade. If you look at Chipotle, we had 2 10-contract trades before it had broken out above the 1,000. Okay, but on Google, our average P&L per trade is 63.2970. Right, we've got an 80 to 90% win rate depending on how many contracts we're taking. Right, so. Put that back over there. All right, cool. You are welcome. So let me clear these off of right here. And let's go look at some companies now. Let's go take a look at a few stocks. All right, so let's go back and resize this. Let's bring that current. And, you know, I get a lot of questions all the time, and I have got AMC, GameStop on my list all the time, and I've added 1 additional stock there. It's not being pumped as much yet by Reddit, but it will. It will, and that's Hood. I talked about Hood last week in this show, right? And then that day picked up Hood that morning. The next day, Hood became optionable and went through the roof, shot up to $80 a share from the $32 or $34 it was at when we talked about it on the show here last week, and it absolutely exploded. It was a great move. I'm out of my position on Hood. You can't run up from 35 to 80 and think you're going to just hold on to that position forever and hope it doesn't pull back. And now, you know, as of yesterday, we were 59 and change or so, 57 as of yesterday. So I still think it has opportunity to it. We're going to talk about a trade setup that I'm looking at right now, potentially for today. On it really is going to come down to what it does in the open of the day. But if we look at GameStop, AMC first, right? I'm a big fan of both of these stocks. Actually, let's do this first. That just helps me be able to see a little more detail on the position. All right. So on GameStop right now, I'm a little bit leery on doing what is called a naked put. I don't call it. It's called a naked put. right? I'm a little leery doing that trade right now because of the overall bearish pattern we have seen in this stock. Is it the summertime that's causing it? Did all the people from Reddit go on vacation? Kind of what I'm getting at. What's the reasoning behind it? It's not getting pumped the way that it was, right? Will it again? I don't doubt it for a second. What did I see on CNBC? I think AMC is at 100% short again right now. So it's insane, right? But for me, I'd want to see us move up a little bit higher. If I were looking to do anything on this trade, I would look to sell a naked put below that 111.66 level. That's a long way away. But if we go to TradeStation and let's go to GameStop, GME. All right. Single 20 may not cut it. Actually, we're pretty good. Yeah, we're okay. Right. So I'm looking. No, I need more. So let's just get all the symbols up there. So I said it was below 112. All right. So, the 110 only pays me 12 cents for this week. It's not worth it for my time. If I go out to next week and look, and I wouldn't be doing this for next week until tomorrow. But the 110s right now are trading at 50 cents. So if you think by next Friday, which is August 20th, if you think that come next Friday, the price of GameStop will be above $110, then someone will pay you right now. If you did it now, they'll pay you 50 cents. I'm using the mid price. They'll pay you 50 cents for you to take on an obligation that you will buy it at 110. See, why would I buy the stock at 150 if it's trading at 110? Or let me rephrase that. I can buy the stock right now at 150, right? 164. I could buy it at 164 right now, or I could let someone make me buy it at 110 if it gets down to that level. Right? I'd rather have to buy it at 110 than buy it at 164. Now, will you give up something there? Yes, the upside potential. Naked puts is a great strategy. It is the start of what I call my wheel of fortune. My wheel of fortune, which just goes round and round. Right? I sell a naked put. The worst thing that can happen to me is they make me buy the stock. Once I buy the stock, I write a covered call. The worst thing that can happen to me is they take my stock away. They give me cash. And I go back and find another stock to write a naked put on. It just goes round and round. Right? It's a profit wheel. It just goes round and round and round. One of my favorite for my retirement account, this is it. Between covered calls, naked puts, diagonal spreads, primarily this is done in retirement account for me. Right? And for those of you that are familiar with how taxes work and some of those things, and of course, check with your own tax guys, right? And gals. But when you buy a stock, you've got, X time, a year, whatever it is to go from short-term to long-term holdings. And that's all changing with some of the new laws coming out from Biden, right? Or could be changing. So if you own a stock, and let's say you owned ExxonMobil, and for ExxonMobil, every single week you keep writing covered calls on it for a week. It's awesome, right? So now you own it a year. You're like, when I sell it, it's long-term capital gains. If you had a covered call on your stock, or the way that it's written is, if your stock is encumbered, and that is encumbered, it is held, it's on hold. You can't sell it because you've got a short call against it. That stops the holding period. It just puts it on hold or takes it off hold or whatever you want to call it. But in essence, if you had in 365 days, if 300 of those days you had covered calls written on your stock, you're only 65 days that you own the stock, and it still becomes short versus long-term capital gains. By putting it in a retirement account, you avoid all of that, which is why I trade it there. That's number one. The second reason is the safety factor to me is much better by doing that than it is trading directional trades. It's taken me decades to build my retirement account up to where it is, and I'm very pleased with where we're at with it. So I don't want to take any undue risk on there. If I can get 3 to 5% a month in my retirement account, I am tickled pink. I don't need these home run trades where we're making $5,000 and $10,000 and $50,000 on a trade. It's nice, but if you're if you've got the opportunity to make that 5 to 10 to 50,000, you've got the opportunity to lose that as well, right? So read Market Wizards if you're not sure what I'm talking about. Yeah, easy, boring money. Exactly, elite trading. That's exactly what it is. It's like watching grass grow or paint dry or whatever your favorite way of saying it is, your phraseology that you like to use, right? Let's see. Writing options is certainly a nice income stream. Bill Big D, yeah, and that's why, when Money Mitch asked about favorite strategy, that's why to me, when we look at Iron Condors, man, that's the sweet spot for me. It's a cash machine. Ka-ching, ka-ching, ka-ching. It's the old cash register. Press the buttons, boom, right? Poof, the draw pops out, right? It's a cash register for me. I do it every month. Do I have a chance of being wrong? Yes. And on a normal year, I will be wrong 1 to 2 times in a year, which generates, if you do it right and follow the rules that I use, it generates about 40%. It's not horrible, right? It beats what the S&P does on a regular basis. Now, are there going to be times that it's worse than that? Yeah, I said a normal year. The worst that's ever happened to me is 3 times in 1 year it went against me. That's it. I mean, you deal with it. It's part of trading. They call it trading, not winning. Captain Cabby, selling options has been great in the summer chop. Oh, it's been fantastic. I love it. But for GameStop, this is where I'd be, guys. I would be down below that 110, right? It was 112, but 110, sell that 50 cents, collect that premium. And as long as it stays above 110, you're good. You keep, one contract, $50, 10 contracts, $500, however many contracts you're doing, right? You can do it with as little as 1 contract. AMC, we'll kind of set that up. We'll go back here and look at AMC. All right, so AMC, it's a harder sell on AMC. We've come down now here. Again, I told you we're going to talk charting to talk options. You've got to get the charting part down if you want to get the options part down. So here was our very weak, but our V bottom in there, very strong V top. And then we put in a high, right? We put in a low. We put in a lower high, and we put in a lower low. Lower high, lower low, lower high, and now we're at another lower low. Am I excited about it? Not really, right? So where am I in my chair? I'm back here. Actually, I'm back here. Right? I'm not ready to place a trade on it. If you were interested in this one, and you're not going to get anything for it, we'll look, but I'd want to be down below $24. So let's go look at AMC and see what we can get for the $24. Wow, that's actually not bad. For this week, $24 puts, you could pick up 36 cents. We're talking $12 away. When do they have earnings coming out? That's why. Let's see. Yeah, I thought it was earnings. Let's see. Oh, yeah, they're today. So, of course, I wouldn't do anything with earnings being where they are. This is what this blue bar is for. My earnings, that E, should be on the right side of that blue bar. If it is, then we've got enough time to trade. You're not getting overcharged in the options prices there. All right, so let's see. So could you trade it? Yeah. Would I be trading this today? No, not at all. Let's just look at next week and see what they're doing next week on the 24s. Wow, 77 cents. Again, you can't do anything until the options, earnings are out, and I wouldn't do anything. But is there an opportunity here? If you believe, and see the magic words, if you believe that this stock stays above 24 come next Friday or this Friday even, then that's where you go. We'll see what the earnings bears and where that all goes. I didn't look because I really haven't been trading it per se. Let's see, AMC. All right, so in post-market, they had a quick pop yesterday. So we closed up yesterday about 34. We got a pop up to about 38. And right now we're at 36 in jingle. So we've got some increase in there in the pre-market right now. But nothing that is driving me to say Yeah, they were out yesterday. Okay, was it after the market then on AMC? Smash the like button. I appreciate that, folks. Earnings are out. Okay, thank you, Elite. I appreciate it. This was a nice permanent surprise options, Billy. Yeah, there you go. I love what you're doing, sir. I appreciate that, Jim. Thank you very much. Thank you very much. All right, let's keep going. Hood. What are we doing in the hood? Right? Hood has been an interesting character. Right? Did I do anything special when I was here last week? Tuesday was the 3rd. So here, pre-market, I talked about 7 a.m. I talked about this right here. Right? Picked some up this day, sold half of it here, sold the other half of it on this day. Right? And completely out of the trade. Right? How do you run up to that $80, plus, what was the high there? 85 to $85 and say, yeah, it's just going to keep running to the moon. You got to lock some profits in. Now, did I sell all of it? No, I sold half. Did it cost me a little bit on day 2? Yes, I got out of the second half at a lower price than I did on the first half. That's okay. I kept half the trade in case we ran. I had a runner that I could trade. When I look at Hood right now, all right, when you look at Hood, my fear is what? Okay, there we go. Let's make it a little bit bigger. My fear on it is the backup. There's a phraseology in candlestick charting. If any of you are familiar with the book Candlestick Charting Explained, Gregory Morris was the original author of that book. And the last version that was written was co-authored by a good friend of mine, Ryan Litchfield, who also is a coach with WealthbuildersHQ.com. And Ryan talks about these open windows in candlestick charting. So what is an open window? Right? We closed here. We opened here. This is an open window. The market doesn't like open windows. It wants the window to close, which means filling the gap. So my fear is, do we fill the gap on Hood? So right now, let's say I don't want to snap a horizontal line, but let's do this instead. Oh, let's see. Okay. So right about, what was our high just to get it? 48.59. No, close. Sorry. Close 46.80. So I got 46.79. I'm within a penny. We're good enough. Right? So I would want to be down below that level is what I'd be looking for. So let's come over and look at an option chain on Hood. And I said, that's why I write things down. 46.80 is where we want to be. Below there. So if I go to the 46s right now, I can get 23 cents for this week. Now, you still got a couple days left, right? It's only Tuesday and market hasn't opened yet. So you got 4 days in this week yet. I could pick up 23 cents. So if I believe that Hood stays above 46 come Friday, they're going to pay me 23 cents a share. Worst case scenario is somebody can make me buy it at $46 per share. But if I was willing to buy it today anyway at 57, 56.90 right now, if I'm going to buy it at 57, I could pick that premium up instead. Right? Now, could I do next week's and look at the 46 at next week? You could. You'd get $1.53. Right? Next week has a delta of 17. It's got a negative symbol. That doesn't matter. Right? If we look at this week, the 46 has a delta of -6. What does that mean? There's a 6% chance that this position goes against me. 6%. That's it. Just 6. 1, 2, 3, 4, 5, 6. 6. That's all. If I do next week's, I've got a 17% chance. Still within my range. As long as it's under 20%, 20 or less is my norm. I will do a little bit higher at times, but normally under 20% risk in this trade is good. But if I can get 6% for this week, why would I not do this week? That's me. When you are a buyer, buy as much time as you can afford to buy. When you're a seller, sell as little time as possible in that trade. Right? That's where it all comes down to. How little time can you sell to maximize on the amount that you pull in on that trade? Rotation from oil to reopening trade. Thoughts? Okay. Well, if we analyze oil, what happened yesterday? It took a big hit, right? Right? Look at what's happened overall on oil. Right? We were up at a barrel of about 72, and right now we're at 68. Right? And so we've got a little bit of a pop today. Right? This is all today. Yesterday. Sorry, my bad. Right? Here we go. Here's 10th. So because it's futures, that vertical line is today, even though today started yesterday. It started on the 9th, right? Over here, we're up into the 10th, but this is today. So we've taken a little bit of a pop. So overall, yesterday, we had a continuation slide from the day before, a little recovery towards the end of the day, and then we got a little bit of a pop going out of there today. But overall, oil prices are down. Right, energy, is taking a huge hit right now on, from where it was. Summertime is here. We're not at holiday yet. Will we see it go back up around the Labor Day holiday? Very possibly. Normally, Memorial Day, Labor Day, you see your bigger price rises. You'll get some increases through the summer, but we are seeing less usage out there right now. There are more people flying, less people driving. And even with the driving part, just getting your hands on rental cars is insane, right? We have family. We're going to Florida next week, and we have family that's going with us, and they could not get a car in Florida that at a decent price. So they're actually flying to Atlanta, driving 8 hours or so to where we're going to be in Florida with the car, and then driving back to Atlanta because they just couldn't get it. The price was killing them, it was crushing them. How expensive the cars were costing. We paid over $1,000, I think it was $900, something like that, for a car for a week in Florida. So it's crazy. So as far as reopening trade, I think this is very much predicated on what I know it is. The crude is very much predicated, the oil companies, Exxon, Chevron, and the likes, very much predicated on what OPEC is doing, right? How much OPEC regulates or deregulates, meaning more production, less production. Part of the slide started with more production. But then on top of that, there are countries like Russia who are notorious for dumping. They don't care about the fines. The fines mean nothing to them, right? There was a Steven Seagal movie. It was filmed in Alabama, I believe it was, and there was dumping going on of toxic waste, toxic chemicals. And the guy was fined for it. He was caught, he was fined, and he grabs Steven Seagal and whispers in his ear and says, I got a $25,000 fine. I made, I don't know, $10 million last year. I forget what the number was. But point being is, I'll pay the fine. I don't care. Russia will pay the fine. They don't care because they're making bank on their oil because they've got an excess, have had an excess, and they dump it, right? It's happened with oil. I was in the steel industry. We fought it in steel all the time, fought it. The steel industry fought it. I looked for it because we would buy that steel, just cost. We could buy it 5 or 6 cents a pound less. It was a killer. When we were paying 20 cents a pound, and now we could buy it for 15 cents, paying 30 cents, we could buy it for 25 cents. It was well worth it for us, right, as a company. We didn't know it was lower, but we just knew by cost that something was going on. So let's see. Analysis on Tesla. Sure, Jim. Let's take a look at Tesla. I'll do another analysis tonight on it. I do it every day, but my last one I did over the weekend. So let's see where we fall now. All right. So Tesla right now, just so you can get a view of the entire Fibonacci that's in there. Right. So here is our fib. Here's our V top. Here's our V bottom. Right? Lots of move up. There's a very sloppy H pattern. in there. We violated the zero line. We had a great zero line breakout in there, right? Two of them actually trade. And then now we're sitting near that 382 level, right? Which is, it's hesitating in that area right there. Now I'll bring it back in. And what do you see now? I've got a 700 line drawn. I've got a 717.85 line drawn. That is the fib line. And my 8-period moving average, the pink line, is at 699.27. So I have a confluence of the 8 moving average and the 700 level. I've got a resistance up above of that 717.85. And this is why. This is why I am not a breakout trader. Here, kitty, kitty. Here, kitty, 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 kitty. Here, kitty, 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 kitty. Pops its head above the trees and goes right back down again. Pops its head above the trees and goes right back down. Close above there, retest and bounce. And now for me, I got a better setup. So what am I looking for? A, right, on Tesla, make it back to the 700, close near the 700, bounce off the 700, and I would like that much better than where it's at right now. B, if we look at, and I'm going to write the number down, 717.85. Let's go look intraday. Oh, let's get rid of the lines first. Let's go look at Tesla. So big move down, big move up. It's all the Bitcoin stuff that's going on right now. Musk has been very vocal. We closed up yesterday about we'll call it 714. And right now we're at 714.5. Right? So until I can get 717.85, until I can get above this area here, I'm going to be cautious unless we get back to 700. Then I can take the bounce off there. The critical thing here is, although we are forming a rectangle with what's going on right here, right inside of here, although it's a rectangle, the more important piece of the puzzle for me is the moving average is still climbing. So we're actually pinching, if we base this off of moving average and the top's holding consistent, we're pinching into an ascending triangle. So that breakout becomes even more powerful when it does actually happen. Okay, so just an FYI, I like this very much as potential to the upside if we either get above this fib line or pull back and bounce off of that 700 level. All right, so I hope that helps. Yeah, Lee Trading Center, mRNA, $500, Rob. You called it. Yep, we have crushed it on Moderna. Up. Added to the S&P 500. We talked about it in there, and this move has been astronomical. This it might have been one of them that we had last week in the show. I don't remember, but I mean, it is doing extremely, extremely, extremely well, to the point that my fibs are no longer valid, and I can add more fib lines, which is what I need to do in here. I did it, but didn't save it. So we're going to add a negative 1.618, a 2.618, and we're going to add a negative 2. And we're also going to add the 3.618, which just doesn't give us much there. Let's add a 3. Minus 3. We get this far up in fib lines, this far away, they lose a lot of their validity at that point. They're not as strong of a level any longer, right? But if we look, we are up above that minus 3, which is just 300% increase. Down here, between these two blue lines, that's 100%. Okay? Then we've got the extension. We've got the extension. Okay? So actually I drew it incorrectly. Let me make sure I do that right for you because I missed the one. So you got this here. You got 0 to -1, -1 to -2, -2 to -3. Now you can see they're all equal distance spaced. Okay? So where are we? 470.29 is the critical level. 470.29. Can you continue taking the breakouts? You can. If that's you as a trader, there's nothing wrong with that. If it works for you, then take advantage of it. If that's not you, right? If you're not that type of trader, right? Then wait for the pullback to the 470.29. So let's go look. Actually, let's do it here. Just so we can see what's going on with pre-market. All right, so let's draw a line. 470.29. All right. Wait for the pullback to that level and the bounce. If you listen, can you take it now if you wanted to? You can. You're taking that breakout in there without any retest. This, to me, is not a trade that's undoable. It's a trade that carries a slightly higher risk. As long as you accept that risk, right? Will Rogers, if you're willing to take that risk on, something like Will Rogers, if you don't know what it is, don't worry about it, right? If you're willing to accept that risk, awesome. If you're not, awesome. That's okay, but you've got to accept it. You should not go into this blindly and say, yeah, let's just see how it goes. I mean, could a stock like this easily turn around and drop 30, 40, 50 points? How do I know that? If I go over to this template here, Wilder's average true range is $30.37. That means from high to low, intraday, it moves $30. Could it easily move $30 to $60, which is 2 days? Yes, without a doubt. I mean, heck, what did it move yesterday? Yesterday it was up $70. Yesterday it was up almost 71. Call it 70 bucks. It's up $70 yesterday. It had a 2-day move in 1 day. Yes, it can move that. Can it give it all back? Can an analyst come out and go, whoa, Horsey, you went way too far, way too fast. We need to back you down, baby. You're a little too aggressive right now. Let's drop your rating to a hold, right? You've moved too far too fast. And that hold rating, depending on who it is, you know, if any of you remember the old E.F. Hutton commercials, when E.F. Hutton talks, people listen, right? When Goldman Sachs talks, people listen, right? So depending on who that rating is coming from, you could see a shift in direction, albeit maybe short term. If you're in the trade and it expires in a couple of days, couple of weeks, you got some things to be concerned with. So once again, you'll pick what's the right entry for you, the right rules for you. My job is to make sure you understand them. As long as you understand what you're getting yourself into, you're awesome. If you don't, well, you may not be as awesome. How about that? Right? Big flows on the 510 calls. All right, let's see. I got to put on another page here. TradeStation sometimes just doesn't like to play nice. So I normally have this open on another window. For some reason, it is not changing over my, there we go. I always keep it open so TradeStation recognizes that it's active, because sometimes when it's minimized, it thinks that it is, it's in the background. It doesn't bother to update it. All right, so if we look at 510s on the calls, yeah, so I mean, we got decent open interest on it, 22,000. The 500s have 9,000, but that is kind of our at the money option, which will have all time value in it. For me, as a trader, I'm looking at the 70 delta, which is the 480. Right? 2,166 contracts. It, let's see, has a fair value, a theoretical value of 22. It's trading at 24 and a quarter. It's not bad. That's actually pretty good for a stock like this with the move that it's had. They're really not taking advantage of you. Now, if you think that we're going to go up from here on Moderna, could you go find something down below the 540s as a put option? Let's see, 440s. My bad, 440s. Like, why would that be there? 440s. Wow. For this week, if I think come the end of this week that Moderna is going to stay above 440, $50 away from where it is right now, they will pay me $5.90. My risk in here, my theta is 20, right? I mean, my delta is what I'm looking for. Theta of 20, I'm not too worried about. Delta of 16, I have a 16% chance of being wrong on this trade. Heck, I want to go another step. If we look at the -2, it's 390. So what are the 390s paying me? Wow. If I think the stock maintains above $390 per share, I could sell one option contract, take in $128. And as long as it stays above $390 a share, I get to keep all that money. That's $100 from where it is right now. Right? This is why I love options so much. When there's a small movement in the stock price, there's a magnified movement in the options price. All right, let's see. Jim said, do you purely use fib retracements as support and resistance? I use them all the time, Jim. They are definitely my main support and resistance level, along with $100 price points and my 8 and 21 moving averages. Those are my keys to what I do. I don't believe in very in-depth systems with very crazy, nutty amount of indicators that you use on there. For me, it's keep it simple, right? It's the best way that works for me. You know, and here, Fibonacci's work extremely well. Guys, there's a trade system that I use, a setup. It's called a zero-line breakout. It is my system. I developed it. Basically, we're looking at a stock that has had a certain pattern to it, right? And if I look, let's see, who do we have open right now? Mr. Softy is one of them, right? MSFT. Microsoft. Okay. So let's go back over to, let's do that. Let's go to 2. So let me pull it here. It'd be easier to see. Microsoft, we entered, well, we set it up on the 2nd, right? Is the date of that's the date we were looking at it for, right? Bullish trade, we got in at 285. So sometime after the 2nd, so where were we? So right here, we were looking for a retest of that 284. We got it. We bounced. We took the entry. Our very first exit, so we got in at 285. Our first exit was 288.5. We took that first exit 2 days later. We moved up, and this is our initial stop. We moved our stop up to break even. And now we're looking at 294. Just couldn't see with that bar on there. 294 is my next target, right? My stop is up here, so we're above break even. If it does move back against me, no harm, no foul. I'm going to get taken out, still make a little bit on that second half of the trade, but I already made my money on the first half. Guys, this analysis that I just shared with you right here, this takes us back to May 20th. Everyone, from when I started releasing this to my own students, every one of these are documented, every single trade. You see exactly what we do. I tell you where to get in. I tell you where the targets are. I tell you where the stops are. We use 2 contracts as our example. You could use less, right? You could do 1. But guys, if you want to get access to this training, it's free. I send out usually 2 videos a week. We'll be doing 1 tonight. I already know who my candidate is. Believe who it's going to be anyway, right? we're up right now $11,756 this year, right? From May on it. Go to tradewithrob.com/go. Right? That's the thing that's been running across that ticker the entire time is right there. So go check that out. Right? And if you guys want to learn more about charting, Spencer, I know it just hit 8. I heard my alarm. If you guys want to learn more about charting, I'll drop it in on the YouTube. I think I could drop it on YouTube. Can I? Nope, I'm not seeing it in there. Oh, there we go. Doing a free training this week. Doing a free training this week called Becoming Chart Smart. Becoming Chart Smart. We're doing it Wednesday, tomorrow night at 8, and tomorrow, Thursday afternoon at noon Eastern. All right, so come and check them out, guys. I mean, it's great training for you. There's no cost to either one of these. So come and take a look and see what it's doing for you. All right, you there, Spencer?
I'm here. We got to wrap it up. I'm wrapping it up.
That's why I'm calling you.
All right. Thanks a lot, Rob. Have a good one, everyone. See you guys on the next show.
All right.